Hey everyone, welcome back to the channel. Happy to bring you the next housing market update we have here for the month of June. We have some interesting trends going on as well as what's going on with mortgage rates. So if you don't know, the 10-year pretty much collapsed to about just under 3.8% the other day. So I have a feeling we have an inflection point. We have a moment of truth, if you will. So given that a lot of people have been kind of locked out of the market for affordability, given the rate and price situation. Also, insurance and property taxes. I think we're getting to the truth is going to unveil what's going to happen in the real estate single family housing market. It's going to be interesting to see what happens moving forward. I don't know what's going to happen at this point now. I'm kind of on both sides. There's people leaning on to, now that, I'm sure the majority of people, probably more than 90% of people agree that now the interest rates are coming down, it's going to bring more demand onto the market and it's going to increase prices again. I'm kind of 50-50 on that, and I'm also on the side where possibly the interest rates coming down could actually come down with interest rates. And the reason I say that is because last time that interest rates came down in 2008, prices came down with it. And what happens is transactions happened more. So the more transactions that were happening, prices were coming down. And I'll explain that here later in the video. But so it's going to be really interesting to see the what's going to happen here, not just in here in Florida, but around the nation to see what goes on because everything is hyper local. So there's a possibility as well that I can see people who've been on the sidelines from selling wanting to put more inventory in the market, and given the recent jobs report and where unemployment's going, we've officially triggered the SOM rule, which means basically that unemployment has gone up about 0.5% in a 3-month rolling average. So now that we've triggered another recessionary call or recessionary indicator, that we could see demand dropping off because people are losing their jobs and they're not finding jobs to be able to find work to cover the bills now that they're inheriting with the new current environment, with prices being at where they're at, insurance costs going up, the cost of home ownership going up, the property taxes going up. So I think right now it's going to be the tipping point of seeing where the housing market's going to go. So and we're going to see what happens together. We're going to see who was right, who was wrong, or maybe a little bit of both, depending on your market. What's going on in Austin isn't going on, and what's going on in where I'm from, in Grand Rapids, their housing values are still going up. Here in Orlando, our housing values are still going up. So it's going to be interesting, but we're definitely at an inflection point. So we're going to go through some data today. We're going to go through the hard numbers like normal in the state of Florida. Then we're going to break it down to the area here that I serve in Central Florida. And then after that, we're going to go through the Camden market and dig deeper, kind of see where we could see the market going. Nobody has a crystal ball, but I think that we might get into a period possibly where, as transactions are increasing with rates coming down and more people coming off the sidelines, but possibly as well as student loan payments and other forbearance or pause debts that have been going on, start going back into the consumer's payments. Everyday Americans' payments, that we could see demand falling out because the savings rates are really low, and people's wages aren't increasing as what a lot of the market expected. So it's going to be interesting to see where things go for the rest of this year and into 2025, especially given the what's going on politically. Things can go either way, and either candidate can produce or can in either pass stimulus for the housing market or just in general. So it's going to be an interesting point now moving forward. So anyway, thanks for being here. I appreciate you guys being here. You could have been anywhere else in the world, but you're here with me today. So now let's dig into this data. All right, so for the state of Florida, we're for closed sales, we're down 11.1%. Cash sales were down 14.7%, and this is where I'm thinking to a little bit of people, a portion of the population is starting to lose liquidity on demand. All this cash sales, that demand that's going down for it, is that's where I'm kind of that another data that I'm looking at from like Fred is where I'm getting my opinion on this is why we're down on cash sales. Cash sales as a percentage of closed sales were down 3.9%. Median sales price were only up 1.7% to from 420,000 to 427,000. Average sales price were up 4.7% from $589,981 to $617,768. Median percent of original list price were only down 1% year on year. That's the percentage amount difference from what the asking price is versus the difference. So really, if it's at 100% at list price, they ended up taking 3.5% less than what was asking. But year over year, we're only down 1%. That's the difference there. Median time to contract, we're at 34.6% from 26 days to 35 days. Median time to sale up 13% from 69 days to 78 days. New pending sales were down 2.3% and then from there, new listings we're up 6.6% from 29,220 to 30,975. Pending inventory, again, demand's decreasing just a little bit over year, 2.5% from 35,286 to 34,401. So people are still buying, just not as much as they were 1 year ago, but very slightly. Active inventory, we're up 60.1% from 60,433 units to 96,765 units. And months of inventory, we are up 64.3% from 28.8 months to 4.6 months. So now let's go look at the area that I serve here in Orlando, Kissimmee, Sanford. Closed sales, we're down 13.4% from 2,933 to 2,526. Cash sales were down 22.6%. Again, this is like the demand and how much of people have liquidity in their pocket to pay in full. So to me, that's also telling me that some real estate is actually real estate from outside migration is slowing down as well because we're not having that influx of real estate values coming in from other locations to help drive prices higher. But we are still seeing where it's transacting. We'll see that here in a minute in the data. Cash sales as percentage of closed sales down 10%. Median sales price were up 2% from $441,000 to $306 to $450,000 flat. Average sales price were up 6.8% from $538,538 to $575,358. Median percentage of original list price were down 1.1% to 97.7% of the asking price. Median time to contract were up 44.4% from 18 days to 26 days. Median time to sale were up 15% from 60 days to 69 days. New pending sales were down 2.1%. New listings were up 7.7% year on year from 3,347 units to 3,604. Pending inventory were down 6.9%. Active inventory were up 62.7% from 5,102 units to 8,301. And months of inventory, we are up 75% from 2 months to 3.5 months. So we are shifting more and more into a buyer's market. And and even though the median time to sale for median time to contract is relatively still really low compared to a normal market, but given that our old numbers here from the 18 days on the market has shifted, the math that they do there is the difference. So gonna be going into my market here because this to me is more important than just going through the state. So we'll be going through that. So if we're looking at the inventory numbers overall, and I like to break this down, and this is why we are having the average and the median continuing to increase, because it is what is increasing in supply. So where the transactions are happening is where the prices are going to go. The only way that we can actually have some sort of shift is if let me take all the price points here, work these over, apply. Okay, so if we're looking at, now I'm changing the numbers here, if we're looking at where supply is in these prices, right, we're down, we're well below what is normal in the market. And that has a lot to do with what used to be at these price points pre-2020 have increased to the chart I was showing you earlier. So while supply is going up, we do have, just about as, we have more inventory now than we did see, July 2019, and at other certain points, years prior to that. And if you really want to go further back, we could say, 2013 to 2012. So our inventory levels are coming back on the market, or normalizing in our market, but because these are not increasing in inventory, that's why prices are not coming down. But that doesn't mean you can't find something in these price ranges. It's just going to be few and far between compared to what is on sale in the market. Moving forward is going to show us where new listings are coming from. So new listings, we are up year on year, and we are starting to kind of normalize where new listings are at. Other than 2017, 18, and 19, 2020, even though that was a real off year, but if you remember here, the state of Florida was, going back into a normal economic environment where the shutdowns weren't happening as much, and that's why you see these explosions for the migration happening, people moving to other areas. And so we're starting to get into a normalized transition, because even if you see here in 2012, 13, 14, as you can see the bottoms from the tops, it was going up for new listings. So we're starting, in my opinion, normalize into a normal market when it comes to new listings. And if you ask me my opinion, I do think that if there had been sellers on the sideline waiting for rates to come down in order for them to get their house for sale because they want to move, this is going to be their opportunity to possibly get, maybe not top dollar at this point, but certainly something more negotiable for them to be able to move if they're really motivated to move. So I think the psychology of money is going to start changing here shortly, especially in how that the market took a dip in quite a few different ETFs and different sectors of the stock market. So if people are starting to lose that wealth effect in the long term, they could really start to reconsider what their priorities are and where their money should go, and go on their individual situation and what's going to be best for them. So the market doesn't move fast; it moves very slowly, but it does move eventually. So if we're looking here, new listings, we're at 3,604, and that seems like to be the normal of the June. And we're seeing this, and usually it kind of creeps up or down from June to July. So that's kind of what I'm looking for to see where inventory is going to keep going, new listings. I do have a feeling that this is going to drop off because of normalcy and the normal market. This is people start not listing their homes anymore because of the selling season is over. People are going back to school. The kids are going back to school. Vacation time is over, and it's no longer an easy transition for them to make the move. So I do expect new listings to come up. To go down. I just don't know how far. There's a part of me that wants to kind of say it'll kind of flatline, not dip as hard as here, only because of the affordability issue. I think maybe we'll go a little bit low sideways, but time will tell. We'll see where that goes. As far as pending inventory, so how many houses are actually going pending where the seller has accepted a contract. As we can see, the trend lines here, those are still going down. It looks like we reached the bottom in December, so the winter months in 2022 and 2023. We'll see where that goes into the future, but we hit a little bit of sideways action here, and that's kind of normal, what we see as a historical trend. is either go sideways a little bit, go a little bit down, and I'm actually kind of curious to see um, if it continues to go sideways, or now that rates dropped, now that rates are dropping, if this starts to go up now. So this is where I'm explaining that this is the crucial moment and an inflection point of where the housing is going to go for the rest of the year. Being that it's not the selling season anymore, the buyers do have a little bit more leverage since they have more days on market. Their purchasing power has increased a little bit. There's more inventory in the market, so they can take their time to look at things. So there's a lot of different variables that can happen to motivate either sellers or buyers to negotiate a home and get it sold. So let's keep moving forward. Let's see, closed sales. So we've seen here, and this is all by price point. So if you can see again why prices are still continuing to increase, because we have the majority here of the transactions happening from $400,000 to $600,000. So as long as prices keep transacting more here than here, we're gonna keep seeing prices in the higher dollar values. And let's just real quick change this around in a moment, because I'm curious. I know this is going to be really low, but you know what? Let's do it anyway. So again, as you see that, these now we're looking at different prices, right? So we're seeing, $150 to $200,000. There's really no transactions happening there because there's almost no inventory in the market unless it's distressed property that's trading at that point. 200,000 to 250,000, very low again. 250 to 300, just a little bit more in inventory, but really it's when you hit the $300,000 to $400,000 mark that you're starting to see that big step up in where prices are at and trading at. So it's going to be a long trip if we're going to see any negative numbers. I do think that we'll start seeing some negative pricing going forward when it comes to year-on-year numbers, probably starting now that we're kind of flat, 1%, 2%, probably in October is my guess. We'll see what happens. Let me refresh this page here. What's going on? Months of supply of inventory, we are increasing year on year. So if we look at all price tiers, we're at 3.5 months of supply. If we're looking for the 250 to 300,000, we're at 2.2. 300 to 400, we're at 2.6. And then 400 to 600, at 3.5. So if you see the all price tiers, that is a following trend with the silver line. So that's where the bulk of the majority of the listings are coming from in that price range. But again, now that is, if you can see here, right, it's going from, let's say 1 year ago, 2.2%, or sorry, 2.2 months of supply on the market, and ever so slightly we're increasing little by little by little, and now we're at 3.5 months. So depending where rates go, how the consumer confidence is, we could possibly still can see this number increasing. I'm gonna guess, given the trend that we're looking at, we could possibly see 3.8 to 4 months of supply in the market here by the end of the year. That just depends again with new listings, inventory that's already currently on the market, staying on the market longer. If you're following me and you see when I do my 3 and 7 day market updates, you can see that those things are increasing, and it's taking a lot of price increases to get inventory sold. So we'll see what happens. So again, the average sales price, we're still increasing there. That's we're hitting the top here of $575,358. So we're still on the way up from there. And honestly, guys, like if we have any sort of market correction, again, like I think we will return to the mean, but that just means drawing a line straight from the bottoms to the tops, kind of finding out where they cross. If we keep stretching, let's just pretend we just kept stretching this forward, right? Use your imagination, kind of draw those imaginary lines out. I do think we could see a 10 to 20% correction in prices over the next 3 years, and kind of flat line. And I think I'm gonna go at the bottom of where, and even maybe just a little bit further, only because of the insurance issue we have here. yeah, it hasn't been a problem solved at all. They are the local townships and municipalities. They are doing a lot with infrastructure to make the drainage reservoirs we have here to hold the rainwater deeper and bigger, so that way less people will have to worry about flooding. As I'm watching the news, as the storms coming in, tropical storm and coming in from the tropics, they're going out and getting sandbags because this is the lifestyle they're used to. It's the time of the year where they expect the flooding, and these are the impacts of the weather phenomenons that can happen to really distort the affordability of owning a home. So at some point we'll see something correct. When, like I said, it'll be a 3 to 7 year thing. Um, given that Florida is a judicial state, if there's going to be any foreclosures that went on pause, it's going to take 2 years to roll into the market. 2025, 2027, is probably where 2027 probably when we'll start seeing a lot of the foreclosures come in as they're navigated through the judicial system and all that. So we'll see where it goes, but I can definitely see us probably reversing down at least probably an average sales price around 420,000 around there, 400,000 on an average, maybe 450. Maybe that's more realistic. I think 450, but my bear case is 400,000 just because of insurance. So let's continue on here. And then the median sales price. So the median sales price, as you see the average, we're still up, but the median is starting to, while it's increasing, we're pretty much flat this whole year so far. We did an increase from the winter like normal we would expect that, but it almost seems like we're reaching a roll around, if you will. So their median, let's say again, it's at 315,000 in January 2021, and we're at 450,000. So I definitely can see us probably touching back maybe around here, 394,000. I can see a correction in that amount, possibly even 365. So this is probably my bull case, 394, my bear case, 365. And if insurance does continue to, the way it's going, and demand goes down, I can probably see it slipping back to January 2021 levels to 315. So we'll see if there's any retracement with that. There's not as many people definitely moving down here as there was during the pandemic, but I do see still a lot of outside plates coming in, especially Maryland. Maryland has been a very popular one moving in. Kentucky as well. I haven't seen so many California plates. I do see some still, but definitely see New Jersey, definitely see New York, Pennsylvania. I do see a few Michigan plates, some Illinois plates, Nebraska, rarely Alaska. I'm sorry, the one prior, Nebraska, and rarely Alaska. So there's still people moving here, but where their wages are coming from, if they're not remote workers, they're going to be settled in here, what's local to the market. So let's keep moving forward here into the townhouse market and condos. So for the area that I serve, I'm not going to go over Florida, but maybe in a future video I will. So for closed sales, we're down 17.3% from 939 to 777,000. Cash sales were down 25.4%. Median sales price were up 2.9% from 305,000 to 313,735. Average sales price were up 4.1% from 314,736 to $327,598. Median percentage of original list price were down 1.1% from 98.1 to 97 flat. Median time to contract 38.2%, up from 17 days to 32 days. Median time to sale were up 33.3% from 54 days to 72 days. New pending sales were down 11.4%. New listings were up 7% year on year from 1,169 to 1,251. Pending inventory were down 15.1%. Active inventory were up 102.5% from 1,936 units to 3,920. And we are up 104% of months of supply year on year from 2.5 months to 5.1 months. So it's definitely having a shift in the market for condos and townhouses, and this is why. All this inventory that we are continually to see the increase, and right now we're at 3,920. The ultimate peak, we were at 8,621. I really don't think we could see those numbers again, but if these reassessments continue to make a burden on condo township homeowners, maybe we could see that again, or maybe we can see it going past that as more condos and townhouses have been being built since 2008. So we'll see where that goes, but that's where we're at here. We're just still going on up, and I think in my gut, for townhouses and condos, I can still see this continuing to go up as time goes by, as they're the units are getting reassessed with these high reassessments that they're asking from the homeowners. I mean, I'm watching the news, and some people are asking 60,000. So other people are asking 100,000 or more. And not a lot of people have that much money just laying around in their safe or at the bank. So in order for them to keep their property, unfortunately, they're going to have to pay that unless they can sell it. And if the HOA, if they don't get that payment, the HOA will probably end up putting a lien on that property, and it could go into foreclosure, unfortunately. So we'll see where that goes. And so I wanted to break it down by price point for you guys to kind of see where inventory is coming from, or what the active inventory is at. So if you can look in our historically, right now we're at 500 units for a lot of them, except for what was that? The Silverline. So the Silverline's about 471 units versus the other ones are at 500. So we're definitely off the lows. Looks like, wow, 90 units at one point. Really, there's not many units on the line, but now, we're actually, if you look at these numbers, let's just keep going all the way back. We're at 500 units with some of these, and that's, it's starting to normalize. We're actually above what normalized, wow, even back in 2012, 94 units, holy cow. And that's interesting to see, because that was really the trough of the prices. So, this is one of those things where the housing market, it's one of those things where it's more emotional, more of a thing where supply and demand matters, but sometimes not always. If there's only 94 units of those, at one point, they came off the top and they're coming on the bottom. So it's really interesting to see when you break down the data by the price point, how many units were on the market, and then it would due to the fact too that as these properties were going into foreclosure, they were losing value. Less units of those were on the market because they were losing that value that they were selling at too. So where they were transacting, with these, you can see 2008. These are what creates the comps, and prices come down, and rates were coming down along that point too. So housing market it's a whole different game than the rest of like a stock market or something like that. So. Really interesting to see what all this data tells us and what it could lead to. So, new listings, we'll get into that. We're at 1,251 in June, and it's kind of like we're under the normal from 2022. We're about the same, just under 2021, but we're definitely above the 2020, 2019. All the years past. We're definitely above those points. So we're seeing more supply coming onto the market off the trough as time goes on. At some point we were at, new listings were hitting in 2010, 1,726. And, that's just month over month. That's a huge increase from February to March. So, it's going to be interesting to see what goes onto the market. I'm sure this was off from foreclosures coming. Pending inventory. We are down to 1,905, so that's where of all the price points are happening. These are what's going under pending, and we are just a little bit down from last year. May, it was a lot higher than May, June than in the past couple of years, and we're starting to see back again to that normalcy here, May, June, where transactions are starting to happen. This was a little bit higher back here, but um, right here is where we kind of had like the normalcy there. So let's continue. Closed sales, we see a little bit dipping off here. How many people actually sold their homes? And these are the lines that represent it for those units at the price points there. So we can see that demand is coming down, which is kind of normal. We're getting out of the selling season, so it's going to be normal to see closed sales. But you can see that where the demand is coming down from the tops is where we're at. So we're starting to get back into normalcy. And then months of supply and inventory, as you can see here, from the 250,000 mark, we're at make sure, yep. So on the far right, 4.6 months, 200,000 to 250. We're at 5.5 months of supply. So this may be some good opportunity for some people who are looking into a condo, and if you have a distressed seller, you have some cash where you can do it. Maybe you can get a deal. And then 150 to 200,000, we're at 4.9, and then all price points we're at 5.1. And like I said, I think this is just going to continue to increase as time goes on due to the affordability issues. So yeah, like these are the things that I know I'm looking at. Other economists are looking at to see what's going on. Over the course of time, it looks like people have thought that a strong economy means lower interest rates, and high interest rates mean a weak economy. But it's actually the reverse of that. You want higher interest rates so that way to support the economy shows its strength. A lot of people aren't saying that the economy is well because the cost of living is very expensive, and that's where they're feeling a lot of the pressure. But that's just kind of how the economics works. Is if you're able to loan money at a higher rate, people have the ability to cash flow off of that investment. Whereas a lower interest rate, it shows while you can cash flow at a very well rates, giving on the timing of it, it tells you kind of that the economy is weak. Hence why coming out of 2021, they dropped rates to almost zero to help stimulate the economy because the economy was weak. We were coming out of that shutdown. And given as well, from 2008, I think the 2005 they started cutting rates. Go dig around and Fred. I definitely always say to do your own research, do your own digging. But that's where I get a lot of my data to kind of help guide me forward of where things can go. I'm gonna say again, wouldn't say that there's gonna be a crash per se, but I can definitely see a correction. Given that over the course of the 5 years now, from 2019 to 2024, now going to 25, while while wages haven't kept up with inflation, wages have kept increasing, and so we can return back to the mean from those wages. And if there is a stock market correction that's going to happen, or possibly a crash in the stock market, I took a dip yesterday pretty big. So it's just one of those things where as long as you hold, I'm not planning on retiring anytime soon. So I'm holding what my losses were yesterday into my my older years. So I'm not worried about it. It's cheap right now. And eventually it goes up so long as it doesn't go to zero and the company doesn't go bankrupt. So make sure if you are an investor in the stock market, you're starting brand new, that you're doing your due diligence and knowing what can change in the economy, what can change in demand, what can change, what the CEOs, the company leadership is planning on doing with the company, and also how much integrity they have, because Enron, right? So if the stock market does continue to correct, I think that prices of housing could come down as people's wealth effect, that wealth effect of people feeling enriched through the stock market, can reflect on the real estate market as well. But that's going to take over time. Things have to happen for at least, in my opinion, 12 to 18 months in order for the psychology of money in real estate to change. And so we'll see what happens. I will, I'm always here, to help you guys out with questions. If you have any, leave them in the comments. And if there's any other sources of data that, can help you look for, signs of changing times, definitely Fred's a good one, and there's other data sources that you can look at. Just doing simple Google searches for housing market. Redfin There's a lot of other YouTubers out there who provide a lot of the information, the Redfin or Zillow. I always like going to SunStats because I know it's not, it's something that's internal here that I have to pay for. So to me, that helps create more integrity, if you will. Because it's not just some sort of narrative where SunStats and where their data source has some sort of a narrative to kind of keep things and manipulate it, if you will. As estimates an AI kind of thing, variable where they're dictating where your estimate's going to be. But the AI doesn't know what a comp is going to be, possibly 2-3 months down the road. So it's not considering that, or possibly is getting too far ahead of itself. So never trust your estimates. Always go and ask for an appraisal. Now, if you're looking to refinance an appraisal, or maybe you just want to understand a little bit of what your value could be, you can also either YouTube University or give a realtor a phone call like myself. We'll sit down, have that conversation with you if you're looking to sell, so that way you don't get maybe hit on the loss of equity. Depending when you sold. Hopefully it's not in the next 2 years, just because capital gains hits you on the 2 years if you try to sell within that time, and right there, that's a good percentage amount of where you're getting hit back, minus the sales. So yeah, I appreciate you guys being here today. I know it's always a long one when it comes to these housing market videos, but there's definitely a lot of things I have to say personally about my opinions where things have to go. There's just a lot of data to look into. So I appreciate you guys for being here. If you need anything else real estate wise, I'm here for you. Give me a phone call, 407-801-1661. Before I leave, though, I do want to let you guys know that I took down the NAR video that I had, the NAR update video, what's going on in the market, being that my MLS was releasing new information down at the time, and I want to stay more current to what's happening here locally. There's actually not very much of what's changing that's different, but just in case there was, I wanted to take down that video so I can give you the most up-to-date information of what's going on in the market, because I want to stay as accurate as possible for you guys so you have a better understanding. So I will be re-releasing that video probably in the next, well, I think maybe August 17th. I'm going to shoot for August 17th. So that way my MLS has time to do what they're going to do. FAR and Aura and everybody else that's, in local here, that it's our, real estate professionals can get everything in order, and we can just give you one good information point, most current that I can. I'm sure it will change in the future. Every market changes, every market changes and it evolves. This is just one of those things that's going to help evolve us into a different real estate environment. Again, I think it is going to be, if you did watch my first one, I do think it is going to be beneficial for transparency, for consumers. So we'll get back into that in the next one. And also I want to let you guys know, this is going to probably be one of my last YouTube videos in this room. This is me and my wife's bedroom. We found a new apartment that we're moving into. Not same complex, just a different unit with a better view, some more space. Since we moved down here 2 years ago, we wanted to give it the warm up, phase to see where we wanted to do, where we wanted to be. What our investing things that we're doing as entrepreneurs on where we want to take our careers go. So we definitely wanted to give it time to see where we want to go in life. Me being in real estate, my wife's a photographer, and she is also talking about opening or starting her own organization company as well. So I'm looking very forward to that. She enjoys doing all that stuff. So, the goal in life is to find what you do in life that you enjoy, and, being able to make, a living off of that. I think that to me is the American dream, is being able to find that. And then, owning a home is second from that, because you can lead, that can lead to it. So thanks again for being here. I appreciate it. You could have been anywhere in the world, but you're here with me. Hopefully you're full up the snacks and the drinks that you got. So happy June, happy weekend to you guys. I hope if you guys are here going through some of the storms that are passing through Florida, I hope you the best. I am going to also make a actual hurricane prep video as well in the future, because I wanted to make sure that especially if you're new to Florida, you have an idea what to prepare for. So keep your eye out for that video as well. So take care, guys. I appreciate it. We'll see you guys on the next one.